$27 billion. That's what South Korea's defense exports could hit in 2026, according to Korea's official economic and industry outlook. To put that in perspective, in 2020, Korean defense exports were about $3 billion. We're talking about a nine-fold increase in 6 years. South Korea has quietly become one of the most aggressive arms exporters on the planet, and almost nobody outside the defense industry is paying attention.
And here's the data point that really tells the story. The combined order backlog of Korea's big 4 defense companies, Hanwha Aerospace, Hyundai Rotem, KAI, and LIG Next One, has reached approximately 118 trillion won. That's about $87 billion. Almost 3 years of pipeline visibility for these companies. And that backlog is still growing.
Welcome back to Asia Tech Macro. I'm Maya. To put $87 billion in perspective, that's roughly the same size as the entire annual revenue of Samsung Electronics' chip division. So Korea's defense companies are sitting on a backlog equivalent to one of the world's largest semiconductor businesses. And today we're diving into one of the most underreported industrial transformation stories in Asia, the rise of K-defense. South Korea has gone from being a Cold War client state of the United States to becoming a top-tier arms exporter that's reshaping NATO procurement, Middle East defense buys, and Southeast Asian fighter jet contracts. And the timing of this pivot couldn't be more strategic.
Let me set the stage with the headline numbers. South Korea's defense exports hit $15.4 billion in 2025, up 60.4% year over year. That growth rate alone is staggering, but the 2026 projection of $27 billion represents another 75% jump. We're not talking about a slow ascent. We're talking about an industry in escape velocity mode.
And this isn't just a numbers story. It's about a fundamental shift in how countries are buying weapons. Why is everyone suddenly choosing Korean systems?
There are 3 reasons that keep coming up in defense industry conversations. First, speed of delivery. American defense contractors have multi-year backlogs. Lockheed Martin's F-35 has waiting lists. Korean manufacturers can deliver howitzers in months, not years. After Russia's invasion of Ukraine emptied European stockpiles, every NATO country needed to rearm fast. Korea was the only major supplier that could actually deliver on that timeline.
Second reason?
Field-proven systems at scale. Korean weapons aren't experimental. The K9 self-propelled howitzer has been in service since 1999. The K2 main battle tank has been operational for over a decade. These are mature, battle-ready platforms with established supply chains. When NATO was looking for proven artillery, they didn't want a paper concept. They wanted something they could put in the field next year.
And the third?
Pricing and ecosystem flexibility. Korean manufacturers are aggressively pricing their systems below American and European competitors, sometimes 20 to 40% cheaper for comparable capability. But more importantly, they're willing to do something that American defense contractors are notoriously bad at. They're offering local production, technology transfer, and ecosystem partnerships as part of the deal.
That's a huge competitive advantage. Tell me about the most recent big deals.
3 deals from the last few weeks really capture the moment. First, on March 30th, Hanwha Aerospace completed production of the first K9 howitzer for Romania. This is part of a contract worth $920 million to $1 billion for 54 K9 self-propelled howitzers and 36 K10 ammunition resupply vehicles. The first batch is being delivered in 2026, and then production transitions to a new factory in Petresti, Romania, with local assembly starting in 2027.
So Romania isn't just buying Korean weapons. They're getting a K9 factory.
Exactly. Hanwha is literally building defense industrial capacity inside a NATO country. That's a completely different model from how American defense exports typically work. Second deal, the KF-21 Boramae fighter jet to Indonesia. South Korea is signing a preliminary agreement during President Prabowo Subianto's state visit from March 31st to April 2nd for 16 KF-21 jets. The binding contract is expected in the first half of 2026.
And Indonesia has already been a partner on the KF-21 development, right?
Right, and there's actually a follow-on deal for 48 total jets being discussed. So the immediate deal is 16 jets, but the strategic partnership covers up to 48. That's significant because the KF-21 is South Korea's first indigenous fighter jet program. The first production unit just rolled out of the factory on March 25th of this year. All 40 Block 1 aircraft are scheduled for delivery to the Korean Air Force by 2028, with a further 80 Block 2 aircraft incorporating air-to-ground capabilities by 2032.
And what was the third major recent deal you mentioned?
The third one is the Cheongung-2 missile defense system to Saudi Arabia. That contract was signed in late 2025 and is worth about $3.2 billion. Chongung-2 is essentially Korea's equivalent to the Patriot system, but with significantly faster delivery and aggressive pricing. Saudi Arabia chose it over American alternatives because they could actually get the systems delivered within a reasonable timeframe.
That's a remarkable shift. Saudi Arabia choosing Korean missile defense over Patriot.
It really is. The Patriot system has been the gold standard for air defense for decades. The fact that Saudi Arabia, one of the most prestigious customers in the global defense market, chose Korean systems instead, that's a watershed moment.
Let's go deeper on what's actually driving this, because I think there's a structural story here that goes beyond just good products and good pricing.
Absolutely. The deeper story is about geopolitical realignment. When the world was relatively peaceful from 2010 to 2020, the global defense market was a comfortable oligopoly. The United States, Russia, France, Germany, Israel, and the UK split most of the export market. Korea was a niche player, mostly selling to former US allies in Asia.
And then the Russia-Ukraine war changed everything.
It changed everything. Suddenly, every NATO country realized they had massively underinvested in defense for 2 decades. Stockpiles were empty, production capacity was minimal, and the U.S. arms industry, which was supposed to be the supplier of last resort, was completely overwhelmed. F-35 deliveries were running years behind schedule. HIMARS production couldn't meet Ukraine's needs, let alone NATO restocking.
So the demand shock created an opening that Korea was uniquely positioned to fill.
Exactly. And it wasn't just about having products. Korea had something that's incredibly hard to replicate quickly: industrial capacity. Korean defense manufacturers had been quietly investing in production facilities for years, partly to support their own military buildup against North Korea, and partly betting that demand would eventually emerge.
Let's talk about specific companies. Hanwha Aerospace seems to be leading the charge.
Hanwha's revenue is forecast to surge from 26.9 trillion won in 2025 to 31.8 trillion won in 2026. That's roughly a 4.9 trillion won increase, about $3.6 billion in annual revenue growth in a single year. They're pushing K9 sales to Saudi Arabia, Iraq, and even the United States. The Chongung-2 missile defense system was sold to Saudi Arabia for $3.2 billion in late 2025. The Chinmu multiple rocket launcher is being marketed to Iraq, Saudi Arabia, and Estonia.
That's a remarkable list of customers, from the Middle East to the Baltic.
And then you have Hyundai Rotem, which makes the K2 Black Panther main battle tank. Their revenue is projected to rise from 5.9 trillion won to 7.75 trillion won in 2026. They've already supplied K2 tanks to Poland, with that deal alone worth billions. Now they're in negotiations for a third contract with Poland, plus expanding into Iraq, Romania, and Peru.
Poland has been the biggest customer, right?
Poland has been the breakthrough deal. The original Polish K2 contract was worth about $5.8 billion for 180 tanks, and that was followed by a much larger framework agreement for up to 820 additional tanks worth potentially $22 billion. Some of those will be co-produced in Poland. Hyundai Rotem effectively turned Poland into the largest K2 operator outside of South Korea.
And KAI is the aerospace play, right? They're behind the KF-21.
KAI's revenue is projected to grow from 3.76 trillion won to 6.0 trillion won. That's almost 60% revenue growth in a single year. They're the lead manufacturer for the KF-21 program, and they also export the F-A-50 light fighter, which has been a massive hit in Southeast Asia and Eastern Europe. The F-A-50 is essentially the most affordable modern fighter on the market, and it's been bought by Poland, Malaysia, the Philippines, and several other countries.
And LIG Next One?
LIG Next One makes guided weapons and missile defense systems. Their revenue is projected to grow from 4.1 trillion won to 5 trillion won. They're the main subcontractor on the Chongung missile system that went to Saudi Arabia, and they're developing next-generation air defense systems specifically for export markets.
So all 4 of the big players are seeing double-digit revenue growth simultaneously. That's not a niche bubble. That's a structural shift in market share.
Right. And the European market is particularly fascinating because it represents a complete reversal of historical patterns. NATO countries traditionally bought from American or European suppliers. Buying Korea was almost unheard of before 2022. Now you have Poland, Romania, Estonia, Norway, and Finland all signing major Korean defense contracts. It's a structural reorientation of European defense procurement.
And the speed advantage is real. Romanian officials reportedly chose K9 over American howitzers specifically because the delivery timeline was years shorter.
That's the consistent feedback from defense procurement officials across Europe. American defense contractors have responded that they're scaling production, but the lead times are still measured in years for complex systems. Korea's ability to deliver in months has been the decisive factor in deal after deal.
Let's also talk about the F-A-50 light fighter, because I think that's a less appreciated success story.
The F-A-50 has been quietly racking up wins. Poland bought 48 of them, Malaysia signed for 18, the Philippines has 12 already in service and is buying more, Iraq operates 24. It's becoming the de facto standard light combat aircraft for countries that need a credible jet fighter without spending F-35 money, and KAI is now developing an upgraded variant called the FA-50 Block 20 specifically for Polish requirements.
So Korea has effectively created a new market segment: affordable, capable, quickly deliverable fighter jets.
Right. And here's the key insight. Korea isn't just exporting weapons. They're exporting the entire industrial ecosystem. Local production, technology transfer, training, maintenance, repair, and overhaul facilities. Some defense analysts are calling this the ecosystem export model, and it's fundamentally different from how the United States and Western Europe have historically sold arms.
All right, Contrarian Corner. The consensus view is pretty clear. K-Defense is on an unstoppable trajectory. Korea is becoming the new arms supplier of choice for nations that can't wait for American or European systems. Alex, what's the skeptical read?
Here's my contrarian thesis. The K-Defense boom might be peaking right now, and the structural conditions that enabled it could reverse faster than people expect. 3 reasons why.
Go for it.
First, the supply gap that created this opportunity is narrowing. American defense manufacturers have been ramping up production capacity. Lockheed, Raytheon, General Dynamics, BAE Systems, they've all received massive contracts and they're scaling. By 2027, the U.S. production capacity for artillery shells, air defense systems, and armored vehicles will be dramatically higher than it was in 2022. The window for Korea to fill the gap won't last forever.
That's a fair point, but Korea has already locked in massive backlogs, 118 trillion won. That's 3 years of pipeline.
True, but contracts can be canceled or renegotiated, especially when geopolitical conditions change. Look at what happened with Australia and France over submarines. France lost a $90 billion contract overnight. Defense procurement is notoriously volatile.
What's the second reason?
Second, the local production model that Korea is selling could backfire. When you transfer technology and production capability to Romania or Poland, you essentially creating future competitors. A Polish K2 factory built by Hyundai Rotem with full technology transfer is a Polish K2 factory. In 10 years, Poland could be exporting K2 derivative tanks to other European countries, competing directly with the original Korean manufacturer.
That reminds me of what happened with Japanese auto manufacturers in the United States in the 1980s. They built local factories, transferred technology, and over time, the local production became the dominant model. Korean defense exports might be replicating that pattern, but in a much more strategic industry.
Exactly. The ecosystem export model is brilliant for closing deals today, but it could be terrible for long-term market position. The Korean manufacturers are essentially trading future market share for current revenue.
And the third reason?
Third, and this is the geopolitical risk that nobody talks about, Korea's defense exports depend on continued tension. Russia stays aggressive, China remains a threat, Middle East stays volatile, North Korea continues its provocations. If any of these dynamics ease, defense procurement budgets get cut quickly. We've seen this cycle before.
But devil's advocate, the geopolitical environment looks like it's getting more dangerous, not less. China-Taiwan tensions, Iran-Israel issues, North Korea's nuclear program.
Fair counterpoint. But here's what concerns me. Korea is becoming structurally dependent on a sustained high-conflict environment. That's not a healthy economic foundation. South Korea's economic growth has been slowing for years. Defense exports are now the bright spot. But if the boom reverses, the economic impact could be significant.
How big is defense in the overall Korean economy?
Defense exports were $15.4 billion in 2025, and the broader defense industry contributed roughly 50 trillion won in revenue across the big four manufacturers. That's about $37 billion. Korea's total GDP is around $1.7 trillion, so defense is about 2% of GDP directly, but the multiplier effects through supplies, technology, and adjacent industries could push that to 5 or 6% of economic activity.
That's significant. And the supply chain spillover effects benefit Korean steel, electronics, chemicals, and engineering firms.
Right. Defense has become a meaningful pillar of Korean industrial policy. It's not as big as semiconductors, but it's growing fast. And here's the deeper point. Korea is doubling down on defense as a strategic industry at exactly the moment when the window of opportunity might be closing. They could end up with overcapacity, just like the shipbuilding industry did 20 years ago when Korea became the global leader, only to face Chinese competition that eroded their margins.
That's a powerful parallel. Korean shipbuilding went from dominant to commoditized in about a decade. Could the same thing happen to K-Defense?
It's a real risk. China is rapidly developing its own defense export capabilities. Russia is rebuilding its defense industry post-sanctions. Turkey and India are emerging as competitors. The next decade of K-Defense is going to be a race against erosion.
Action items time. What should investors and business professionals do with all of this?
3 concrete actions.
First, watch the order pipeline conversion rates for the Big Four: Hanwha Aerospace, Hyundai Rotem, KAI, and LIG Next One. The 118 trillion won backlog is the headline number, but what matters is how much of that converts to delivered revenue and how fast. Look at quarterly earnings for delivery schedules, contract milestones, and any signs of cancellation or renegotiation. The first warning sign of a peak would be backlog growth slowing while delivery timelines extend.
And what's the key metric to track?
Book-to-bill ratio. If the Big Four are still booking new orders faster than they're delivering existing ones, the boom continues. The moment that ratio drops below 1.0, the cycle is turning. I'd estimate that's likely to happen in 2027 or 2028, based on current trajectory.
Got it. Second action?
Second, pay attention to the local production transitions. The Romania K9 factory that's coming online in 2027 is a critical test case. If Hanwha can successfully transfer production while maintaining quality and margins, the ecosystem export model will be validated for scaling. If quality issues emerge, or if local production cannibalizes Korean exports, that's a warning signal. Same dynamic applies to the Polish K2 production and any future joint ventures.
And these local production deals are essentially betting that Korea can stay ahead on technology while letting partners do the manufacturing.
Exactly. It's a race. Korea needs to keep developing next-generation systems faster than partners can absorb the current generation. The KF-21 fighter is the test case for the next round. Block 1 deliveries by 2028, Block 2 by 2032. If Korea can keep that development cadence while exporting current systems, they maintain leadership. If they slow down on R&D, they risk being lapped.
What's the third action?
Third, and this is the strategic point most investors miss, look at the supply chain beneficiaries, not just the prime contractors. Korean defense manufacturers source thousands of components from domestic suppliers. Companies like Hanwha, S&T Dynamics, Hanwha Systems, and dozens of smaller specialty manufacturers. As prime contractors scale, the entire supply chain benefits, and many of these suppliers trade at much lower multiples than the headline names.
So instead of buying Hanwha Aerospace, look at the precision machining companies, the electronic suppliers, the materials providers that feed the prime contractors.
Exactly. The pick and shovel play in any industrial boom is usually in the supply chain, not the headline manufacturer. The supplier ecosystem also tends to be less exposed to geopolitical risk because they have civilian applications too. And many Korean defense suppliers are smaller, less analyzed, and have more room for multiple expansion if the K-defense story continues.
Let me add one more dimension, the technology angle. Korean defense systems are increasingly incorporating AI, autonomous capabilities, and electronic warfare features. Hanwha is investing heavily in autonomous combat systems. KAI is developing manned-unmanned teaming for the KF-21. This convergence between defense and AI is where the next wave of competitive advantage will come from.
Great point. And it ties back to Korea's broader technology stack. The same companies that make memory chips and OLED displays are now feeding into defense electronics. That cross-industry synergy is something American defense contractors have largely lost as their commercial technology businesses have separated from their defense businesses.
And if you want all the data points, contract details, and analysis we discussed today, we publish a free daily newsletter at asiatechmacro.substack.com.
Coming up next, we're looking at India's startup IPO wave for 2026. Flipkart preparing for the largest Indian tech IPO ever at $30 billion valuation, plus PhonePe, Zepto, Oyo, and dozens of other unicorns finally going public. Over 48 startups are lining up for the next 18 months, targeting a collective 50,000 crore rupees in fundraising.
That's going to be a major one. India's IPO market opening up could redefine which companies become Asia's tech champions for the next decade.
And it ties back to a broader theme we've been tracking. Asia's capital markets are maturing across multiple sectors simultaneously. Defense in Korea, semiconductors in Taiwan and Japan, digital consumer in India. Each of these is generating meaningful liquidity events and creating institutional pools of capital that didn't exist 5 years ago.
That's going to be a major one.
Stay data-driven. Bye.